Morning. Be right there. Okay, so as I was saying, we got this gap down, and that resistance area that we covered yesterday pre-market, that held. And so now we've got this 60-minute topping kind of pattern, which you can see here, these three bars. And now a gap down from that. So that is short-term bearish, but the target, I would assume, now breaking below the pre-market lows would be for it to go down and test this low area here. And buyers have stepped up there 2 times. And there's the other that just poked through it a little bit. And I would assume, why not show up there again? Top of the range, bottom of the range. Bottom of the range, buyers show up again. Now, the interesting thing about this time is that it couldn't get through the area that we defined at the beginning of the week. Meaning this 2270 area or 2700 area on the S&P futures, which was the top of this big red down day. So rather than starting the move at the top of the range, it's starting the move in the middle of the range and after a little bit of a consolidation, which would suggest one of 2 things. I'm thinking, well, either it's going to retest here and buyers are going to show up again, and we're going to get what's been the elusive W bottom, and then the minuscule end of year rally, whatever that might be. What would motivate that? I don't know, tell you the truth. With the news that's, around this market and negativity, that doesn't really produce huge things because we're in a trading range. So that's one possibility. The other possibility could be a measured move to the downside. And whenever I think that, I think, okay, well, if that possibility, measured move to where? And just, measured move, I don't know what that line is. Anyway, it was from a long time ago. Measured move would be down to the lows of the year at a minimum and potentially even lower. And if we go with the measured move, I'm just measuring it out and saying, let's see what I got here. Actually, it would be like to here. And I always just eyeball these. I don't get into like an exact. Right? And just say, so you're starting there, would put it here. And is that in the middle of nowhere, or is it something? So we've got this shelf right over here to consider. That's an idea. So we always come up with a couple of scenarios. Either a W bottom, or it's going to continue to push lower from there. So we'll see what happens when and if it gets down to the area of the bottom of the base. And the last scenario would be for some miracle reason this holds and it starts to rally this morning. So it's day to day. We see what Mr. Schizo has in store for us. We see if any of the scenarios begin to play out. We've got now an unfilled gap over here. And just based on this pattern, this gap down, this inability so far to rally, it would suggest a move down to the bottom of the range from here. So I guess, depending on how things shape up in the first 5 to 15 minutes, the initial thinking would be think short. And from there, we'll see what actually happens as to whether prices start dropping or whether they go back up. And, if they do go up, well, how far do they get and so on. And that's bar by bar analysis. Trend now is down. If it hits resistance, what does it do? And we just figure it out at that point in time. Same thing on the Qs. You got those several days up here churning that it couldn't get through the resistance. Same story. Russell's story is a little different because it's just weaker and it's just continuing to move down. And so now, well, here's the low of the year. Poke down there. And could this be a W? Maybe. Trend is down strong. So again, we'll just have to see how it shapes up here at the open. But this looks like it can keep going lower too. And the transports just look terrible. Couldn't bounce off of the low. That's bearish. So whenever I see a pattern like this, the initial thought is that's bearish and that should go lower, but it is extended and it really sets up a textbook breakdown failure. So something that we want to keep in mind if that should happen. So what I'll just do is I'll set an alert on that line in case prices start to go up. And that is done. And we'll see what that does from here. So far, just sitting there. Transports usually don't move too much pre-market. Same thing at the Dow, pretty messy. Looking at the futures, you can see more of what potentially could be a W bottom retesting here. But, you know, it's the same story. You know, and here's the move. Could be a measured move lower. It's retesting this bottoming tail area where the buyers showed up there before. Let's see if they want to show up there again. Or is this inability to move back to the top of the range and this selling here going to shake the confidence of those that are wanting to buy here, and it's just going to continue to drop from this point. So this market lately has just been day to day. Let's just see what you can produce. Can you get through the first resistance on the daily time frame? We have a lot of times, and you can see these green bars, which I should say were green bars, turning into topping tail bars or red bars, and there's no mystery as to what that means. Is that sellers have become more aggressive, and they're taking advantage of any little rallies now to sell into, and the spring is being wound, meaning, okay, buyers, here's your opportunity. Right? Here it is again. You want to buy 2,600 area or thereabouts and get it turned around. And that would be an event. Right? When we talk about events, which are, in other words, of saying, here's a signal of significance, that means now do something in this time period. So if this went lower and we got another one of these bottoming tail bars over here, that would say go long. It's in a downtrend, yes. It couldn't get through here, yes. But if you're a counter trend trader, that would be the setup that says think long at that point. But as long as this keeps going down, go with that. But, you know, be on your toes when it gets down here. Okay, and when I say that, that's the assumption that it gets down there. Since the hourly trend is down, you know, you better be watching pretty closely things like the NYSE tick, the idiot indicator. Yesterday was amazing. I mean, put call was up at 2, and the WY short, which looked great. When I saw that, you know, and Dan threw that out, and I was short it, I covered some, and I'm like, okay, you know, put call that high, who knows what's going to happen, even though this is like one of the worst looking things with a void below. And it went right back up, and it rallied from there. So the market is definitely schizophrenic, and it reacts sometimes in an intraday relatively significant way, and then, you know, all of a sudden, you know, back down it goes. So you have to be agile in this market, because even unless you're playing it with the daily trend being long and, you know, down, and you're just staying short and sitting through these blips, Well, that has been working out as well, but well, lately, if you did it over here, the retracement was horrendous and you're probably covered at the high. I mean, just the assumption at that point was it looked like it could go higher. Right, Dow is the same thing. Bonds, they're holding here, and don't look at that. And it's kind of a not the greatest buy signal. The pullback was shallow, but we prefer a little bit of a deeper pullback because you're so close to the high there. Just like what we're looking at with the equities, you're so close to the low, it potentially sets up the W bottom. So you better be on your toes if you're short. And, all you have to do is really just follow the trend. It could be from the hourly or the 15-minute time frame, whatever it is, just to say, where's major resistance in that smaller time frame, and look what it does when it gets, down into that area thereabouts, and see if it reverses up hard, or does it drop down there in a climactic way. If it does, meaning like vertically, then there's greater potential for it, at least the bounce from there, and then you'll have to assess it. Right? That's what we do every day. And oil just kind of hanging here. I don't know if it's building a base to go up or building a new launch pad to go down. So, stay away. That's the message there. Gold is pulling back here a bit, right? So this is the kind of pullback that's actually preferred within an upward move like that. So let's assume that gold turns around here. Well, now you've got a decent space to get back up to the high and presumably back above it because now it's trending up. But we'll see. You can see there's a lot of things here that are down, but are they down significantly? So as we look at that, there's some Apple news out here. That looks like it could keep going down. And, GE back down a little bit after yesterday's gap up. And so it's day to day, sometimes hour to hour in this market. And so being in the room here, we'll call it blow by blow, and we'll see where it all goes. And just looking at one of my favorites to go intraday, just been chopping sideways, going nowhere, but now it looks like it can go lower. So that's it. All yours, Dan.
All right. Good morning. All right, let's look at opens, and we do have, I see two particular problem children here. Overstock, gapping under our stop, and NVIDIA is not gapping under the stock, but dangerously close. So I'll be watching both of those. We have put spreads on them. Overstock for next week, NVIDIA for today. Tesla, it looks fine. It's gapping down a little bit to the midpoint of this late day run. So that's relative strength again to the broader markets and the weak futures this morning. ACB, we have a covered call. Pot stocks are still very iffy. The Tilray, we were talking about shorting it here. In retrospect, that would have been a home run. SCG, we sold out of the money puts. Philip Morris, we're short. IWM, we have a covered put that expires today. Same with LUV. Urban, we took our money yesterday into weakness. UAL, bear call credit spread. Twitter, a January put spread. NNN, these two REITs, that's gapping down under that base, but the daily is still fine. And WPC, same sector. UNG gapping down. We have a call spread, so we'll be looking to tighten the stop on that. Chud, long stock. We have 2/3 of a lot left. Q put spread, gapping down, but it's far. It's the 159s for next week. And finally, USO put spread. This might turn into a directional soon. We sold the put spread on this gap up day, and it did exactly what we want: backing and filling, holding support, building a base. So I'm, we said it has not been a directional for a while. I said over the high of this red bar it would be, but now we have 4 more bars of data. And I like yesterday's gap down, bullish engulfing, increasing volume. If it holds these levels, then over yesterday's high looks good. Okay, just some miscellaneous stuff. This thing gapping up. It looks like a penny toy stock. Qs. Yeah, that's our stop for now. Yeah. Here, look at this one. This is my favorite long here. I posted it in the Facebook group. That's what we call a bullish gap surprise. Extended daily, wide range bar, and it's gapping into it. It's holding bullish pre-market. There's another penny stock toy. I don't like those. Shop is getting whacked. I had this on my long watch list as a put spread. 148. Wow, that's ugly. Adobe had earnings down $5, 243. It's a mess. Starbucks gapping down 64.75. That's a bearish gap, so that's a call spread candidate. Bell, BEL. It's not earnings. I looked. The way it's going sideways, that might be a buyout. Costs getting whacked, 217. Ooh, that's ugly. That's a call spread candidate also. I'll put that in a window. There's our NVIDIA overstock, NTs. NTs, we got out yesterday at a nickel. So say we did that just, to avoid another, we never try to squeeze the last few pennies out just because we're insurance salesmen. And even though the far strike was fine, it's a 237, so we still have over $11. It's just a headache we didn't have to deal with. This Sienna pro gap yesterday on earnings. Look at this monthly. We actually had this as a core trade on this bar. And then we legged into some covered calls. And, we got stopped out in here somewhere for small gains. But I'm going to watch this to sell a January 33 put. But no rush, but it's on my list. WDC, I've had as a short watch for the last couple days. And there's the Weyerhaeuser again. That still, you can keep that on the list. VeriSign has to get above this to set an alarm at 160. VXX, nothing to do now until we get a reversal in the spiders. Grub I have on my list here. I had it loaded up yesterday and then just never posted it. It has to get above the week's high. But the fact that it's green in a bullish market is a relative strength. Remember I mentioned this one yesterday morning, BBBY, and then I saw it at the end of the day and like, shoot. That's bearish trend, all time frames. All right, what else we got? Some of these pot stocks are all down. GE down 12 cents. Google 1061. That's a mess. And today's Friday, so I'll be looking for any candidate to sell calls or puts that expire today. Amazon 1640. It's a mess. 272. Nah, see, all this now on the 15-minute chart is resistance. So these are favoring call spreads. Apple 169, gapping down, leaving these 3 days as resistance in a downtrend. And this has been weaker than the other fangs. Intel, a big mess. Microsoft, a mess. Hey, Joan. Yeah, I mentioned that the plan is I'm watching that, and Overstock's also a problem child for us today. Overstock's even worse. I have it in a thumbnail, so I'll give you the step-by-step. As long as the futures hold here like they're doing pre-market so far, then hopefully we can hold our breath and it expires worthless. So that's my answer. I'll be watching it and hoping. Here are the broader markets again. We got 2 minutes to go. All right, diamonds. Let me go to the 60. Remember I said yesterday? I said that my bias today, that the 60-minute chart was going to be very important. Look at this now. If we could stay above this consolidation, then I would have been bullish. Now we're gapping under it. So all of this is resistance, and you know, we're here at this prior low, but that's a lot of football players. Joan, and new stop, maybe kill half at that spot, but I want to give it, you know, 5-10 minutes maybe. So it's tough here. And also, you always have to be careful on trying to get out of these, you know, out of anything, but particularly options in the first 5 minutes, because they're going to be spready. Qs, you know, still more relative strength than the other indexes. Spiders, same. This is now, there's many more football players above than below. This was a bullish reverse head and shoulders. And right here, it was a great entry. Look at that. And then it, you know, failed. So yeah, my bias is actually lower here today also. All right, NVIDIA. Yeah, that doesn't look good now. And, you know, had a weak close. It's holding on by a thread. Let's still give it 5 minutes. And it's not a pattern that I want to roll to next week because it's not. I only roll if the pattern is still viable, like Tesla. I mean, we're at a test. Well, no, we aren't. I take that back. I said in the stop that Tesla, I might roll that one because it's still a bullish pattern.